What's going to happen to UK house prices in 2023? Okay, this is a question I'm being asked a lot lately, so let's take a look at the factors that are going to influence the house prices for the rest of the year and what we can do right now to take advantage of a buyer's market. Hey, I'm Chris Peel from Property Abundance, and let's dive straight in. So firstly, what's going to happen to house prices? Well, there's pretty much unanimous consensus at the moment that house prices are on a downward trend. I mean, that is fact. We can see that in the data. They've been falling month on month for the last few months. Now, how far is it going to go is probably a better question. So we've got people like Zoopla, okay, pretty reliable source, saying that they expect about 5% to be wiped off values over the course of 2023. We've got other experts in the industry that track the buying and selling trends saying it could be up to 10%. And we've even got people saying that actually this could last longer than just 2023. And some people forecasting even a 5% drop into 2024. Now, the answer is that none of these people know for sure, okay? No one knows for sure. This is only ever forecasting. And how do we base our forecasts? Well, look, let's dive into it. But before we do, please go ahead and like, comment, and share this video. And don't forget to subscribe to the channel so that you can get regular content out of my own property business just like this. So, why are house prices falling? Well, there's several macroeconomic factors here, things happening in the world that is causing the house price to take a tumble. The first one is looking at the cost of living. Okay, right now, inflation's around about 10%. Now, while ever inflation is so high, people have less disposable income and therefore are A, less likely to go out and buy A, investment properties, B, new homes, or C, even first-time homes. So you've got even three different types of buyers being put off and delaying their purchases, creating less demand in the economy for property purchases. Now, whenever you get lower demand, obviously that drags prices down as well. Compounded with that is the energy crisis. Okay, so right now in the UK, again, gas prices, electricity prices have never been higher than they are right now. We've got the price cap going up again in April, so next month the price cap goes up again. And this is going to create an even bigger problem linked to the first one. So this is just an affordability issue. If people are spending more money on bills, then they have less money to invest in new houses, into upgrading their house, into maybe buying their first house. So whenever you get this bulge in people's pockets or like a bulge in their bills, it's going to result in lower demand in the entire industry. Now, for that reason, you get people selling up and downsizing. So there's less people upsizing and buying, and there's more people wanting to sell and downsize. So this creates less demand to buy and more demand to sell, so you have a demand and supply imbalance. So while ever we've got lots of people trying to sell their bigger houses and downsize the smaller ones, this is what's going to create a strain on pricing. Okay, so while ever this is the case, expect prices to continue to fall. Now, on top of that as well, property owners have just been clobbered for a third time. Not only have they got the cost of living going up, not only have they got the energy prices going up, but they've also got interest rates very, very high now all of a sudden. Well, not very high actually. Like historically, they're pretty average, but very high certainly in comparison to the last 10 years of interest rates that we all got used to. Interest rates used to be able to get buy-to-let mortgages for like 1%. Right now, you're looking at more like 5.5%. Okay, so much bigger differences in the interest rates and therefore the costs of them. So if it's costing 5 times more in interest payments to have a buy-to-let mortgage than it was just a couple of years ago, then obviously this is creating a point where it's actually less realistic for people to invest and make a profit. Now, that would be bad enough on its own, okay, because the cost of borrowing is higher and therefore people can borrow less and afford to borrow less and therefore afford to buy less expensive houses. But on top of that, the government brought in a tax change a few years ago called Section 24. Now, Section 24 is a tax change that basically meant that people have to calculate their taxable profits before taking out the cost of finance, okay? Now, this applies mainly to higher rate taxpayers, but if we're going to build a property business, I'm pretty sure that everyone wants to get to the point in which they are a higher rate taxpayer. So let's start with the end in mind. Now, if you're in a position where you're going to be taxed on money that you literally haven't earned, it's not quite such an appealing concept, is it? Now, obviously, this applies to private investors only, but you've got a lot of big, old-school buy-to-let landlords out there that all of a sudden their massive source of income has been taken away because of this tax change. Because they have these huge mortgages, they've still got, harking back to the days where you could get 95%, 100% mortgages. They've got these big mortgages that cost a lot per month, and they're accepting the fact that, there's not much cash flow each month, but I'm getting the capital growth. But now all of a sudden, there's really not much cash flow because they can't deduct the cost of that mortgage. So it put a lot of big property investors, personal private investors, into a position where their portfolio actually costs them money every single month. They don't make money from their portfolio. So we're starting to see now, because it's a couple of years into it actually coming into effect and it's actually fully biting. This last tax year was the first one at 100% of the cost being non-deductible. That's resulted in a bit of a sell-off. So people either having to sell some properties and use the funds from that to incorporate the others and pay their capital gains tax and pay their stamp duty and put it all into a limited company where they can still deduct their cost of finance, or they're just going, do you know what, I'm out of property, I'm done, sell the lot. And then you get this flood of people trying to sell. So when you get increased supply, people selling off and lower demand because of people having less money, this is what's causing the fall. Now, you might be wondering, well, okay, so where does it end? Okay, now is this just going to keep going? Are we in free fall right now? Are we in a position where we could expect 20, 30, 40% to be wiped off property prices in the next few years? My prediction, probably not. Probably not. And there's a few big reasons why. Okay, now, again, it all comes down to supply and demand. Any kind of market comes down effectively to supply and demand. So there's several factors about the UK property market in particular that make it fairly free fall proof. Now that's not to say that there can't be corrections. Okay, now think back to 2008, it was a pretty big correction. I think it was like 15 to 20% got wiped off the houses, but it came back. And there's several reasons. Now the first one is that we are an island nation. Now because we're an island nation, there is only so much land that you can build on. Okay, if it's not a mountain, if it's not a moorland, if it's not a floodplain, there's only so much good building land. So whenever there's a shortage of land, but are very popular to come to, land prices remain and continue to grow. Okay, remain high and continue to grow. On top of that, we have to factor in the fact that population growth in the UK is greater than house building. Okay, so there are more people either being born in this country or moving to this country than there are homes being built for those people. So again, we have an undersupply of property to be able to cater to the number of people either moving here or being born here. To exacerbate that, we also have population dynamics. Okay, so population dynamic. Now by this I mean the composition of our population as well. There are more single people now than at pretty much the history that we've been recording it, because divorce rates are up, people get married later. There's a lot more single people, and therefore this creates demand for one-bedroom flats in particular. And whenever we've got this surplus of demand, lots of more people needing their own private property, more people moving or being born here than homes being built, and the fact that land comes at a premium, we have got to take this into consideration. This is going to affect our supply and demand economics massively. So I suppose to summarise this, we've got high demand and low supply. Britain is still a very popular area for investment, not just from within, but also for foreign investors because it's stable. We have the pound, it's a stable currency, Brexit depending. But right now things have stabled out again with the pound, right? So there was a bit of a hairy moment. But because we have this stability, because we have the rule of law, because we're an established democracy, because we're considered safe, we attract a lot of external foreign investment into UK property as well. So not only do we have people within the country, I should put that on here as well, sorry, foreign investment. Not only do we have people, a shortage of homes being built for the people living here, but we also have a population requiring more homes, and we also have a lot of property being snapped up by foreign investors. This all compounds it. So demand far outweighs supply. And for this reason, I think my summary is that short term, look, for 2023, certainly, we are going to see a continued fall in prices because of the current economic factors at play, the inflation, the interest rates being higher, the fact that Section 24 is still working its way through the system and there's a sell-off, the fact that we've got this cost of living crisis. Now look, these are short-term issues though. These aren't going to persist forever. So I think ultimately we're going to come back to these fundamentals. So yeah, look, I'm predicting a short-term reduction in prices throughout 2023, maybe into 2024. We'll see what happens with Russia and Ukraine. But this all leads to a continued reduction in prices right now. Now, while that's the case, there is an opportunity for those who know how to spot it. Everyone's saying, don't buy houses now, don't buy houses now. Now there's a saying, I think it was Warren Buffett who said it originally. Be fearful when others are greedy, and be greedy when others are fearful. Okay, when people are panicking, selling houses, trying to get out the market, this is the time when you can pick up some great deals. Now, if you want to stay up to date with this, there's 2 things you can do to make sure that you are first in line for those deals and you know how to spot them, but also what to do with them once you've got them. The first is make sure you subscribe to this channel, drop a like and drop a comment of which of these was an eye-opener for you. And secondly is to book in a free consultation call with my team. Now, if you look in the description down below, you'll find a link where you can book that in. It's completely obligation-free, no obligation, free call with my team where we will get to grips with exactly where you are, exactly where you want to get with your property business, and we will understand the resources that you've got available, so the time, the money, the goals, and we'll advise you on exactly what your next step should be. So if you want to go ahead and grab one of those calls, check the link down below. Otherwise, I'll see you in the next video. Bye-bye.